All right, so basically we have spoken about exhaustion absorption. We have spoken about internal and external divergence, and we have understood what that really looks like. We have noted the conditions whereby we have incomplete absorption, and we know that that simply means that the aggressors are still in power, which means they still want to continue until we have a full absorption, and then they can reverse, because the whole idea of absorption is simply the limitation of aggressors by the passive orders. So if the absorption is not yet complete, it simply means that aggressors still have some excess in them that is making them to still push price in their own direction. All right. And we generally say that the aggressor's direction is we generally say that the aggressor's direction is like the internal structure. So internal structure is not by majorly, that is, internal structure is not just by what happened internally before external liquidity is broken. No, it is by the what? The present trend. So that is it. So internal absorption, we say, is the one that deals with the aggressors actually inducing themselves. All right. Why the external is when we have complete reversal by inducement of what? Of a passive order. So passive orders limiting the effect of aggressors is what we call what? Is what we call absorption generally. So passive order limiting the effect is what we call absorption generally, and of the limiting effect of the aggressors. But however, we have momentum absorption. All right. Momentum absorption is a situation, well, that's why we also call it momentum. I also call it momentum imbalance. Because in momentum absorption, the aggressors is being favored. Remember that in the case of exhaustion absorption, price is actually, that is, the limit orders, the passive orders are actually limiting the effect of the aggressors. That is, they are trying to stop the trend. They are trying to stop the present trend for a reversal. But a momentum absorption is a situation whereby the reverse is the case. That is, now, instead of thank you. A minute, please. So momentum absorption is actually like an opposite to exhaustion absorption. All right. It is actually an opposite to exhaustion absorption. That is, it is an opposite to exhaustion absorption. Why is it that? That is, in this scenario, all right, price is actually chasing the market in the direction of the aggressors. So if the aggressors are selling before, when it comes to momentum absorption, price absorb to still continue that particular sell trend. So it does not cause a reversal. So the reversal it causes is to reinforce, is to enhance the direction, the major direction that price actually is following. So what do we mean by that? This can be in two ways. So for example, what we are saying here is that you could have aggressors, price is trending downward. All right. Price is trending downward, showing you that it is going down. And yet, price will go all the way up here, raise this particular high, and sell without an exhaustion absorption here. That is the implication. Without an exhaustion absorption at that top. That is, the highest volume OR at this high could be W plus, and also the highest volume OR at this particular, for the aggressor that came to raise that high, could also be W plus, yet price will go down. That is where it gets technical, and that is why I save it for the last. Because every other thing is very direct. I told you, once you master your coordinate, every other thing is very simple. They are very simple. They are very direct. Every other thing that we'll be dealing with is very simple and is very direct. Okay, so momentum absorption is chasing price in the direction of the trend. That is it. It is chasing price in the direction of the trend. But however, it is simple. Don't think that it is complicated. No. It is actually simple. Okay, it is just based on understanding. You need two factors to be able to ideally, you need two factors to be able to ideally stick around for to be able to understand momentum absorptions. Just two factors. After the two factors, you are good to go. You are very good to go with doing whatever it is that you like. And also there is a simple cheat code for it. But the two major factors that you need, once you see them, trust me, you can execute and you can carry on with whatever it is that you want to do. What are the two factors that I am talking about? What I'm talking about is this. What is number one factor? Number one factor is incomplete exhaustion absorption or non-exhaustion absorption. That is the number one clue for you to anticipate momentum absorption. Very simple and direct something. In some minutes, we will be done. And that will be all for the boot camp. That will be all for everything about HORC. It is actually a very simple concept. It is just when you are seeing it from afar and you don't understand what I'm doing, that's when it seems like, oh, this whole concept is so crazy. It's so simple. How many videos in the total? Maybe like 8 videos in total, averaging 1 hour per one. So in total, maybe let's even say 10 hours video. So how complicated could that be? That is not complicated. So incomplete exhaustion absorption or non-exhaustion absorption. So what do we mean by that? What do we mean by that? So let's say, for example, I have my passives. Let me list the number two because they have to work hand in hand, actually. They work hand in hand. You cannot do one without the other, except if you want to blow money. All right. So let's say, for example, so the second one is internal divergence call. Internal divergence call. Incomplete exhaustion absorption. Then what else to check is internal divergence what? Internal divergence call. Which means for every exhaustion absorption, there is actually an internal exhaustion absorption that is happening, calling price. Just that once it is complete, there is absolutely no need for exhaustion, absorption. So once it is complete, there's actually no need for exhaustion or absorption to happen at the high again. And in fact, that is the case of what is happening presently on futures chart of Euro USD. That is why some of you are like, oh, on futures chart, sir, it is W plus and W plus. Can I tell you that reversal will still happen? Even though it's W plus and W plus. Reversal we anticipate will still happen. It will still happen, even based on that. And it will happen this week. Even though some currency pairs are giving you the cheat code by giving you exhaustion absorption. That's why I said there is a cheat code. But it is not every time that you probably will get that cheat code. For example, last week, Monday trade, the sell, I don't think it gives any cheat code. I don't think there was any pair. I don't think there was any pair, or maybe I didn't search well, that actually gave an exhaustion absorption at that high. And yeah, price still sold. It was purely momentum absorption for both futures chart and normal currency chart. Okay, so the cheat code will not always happen, but you just need to understand these two factors. What is calling price? That is number one thing. What is calling price? And remember, it is an opposite of exhaustion absorption, which means you could have all. That is, in that case, if I have W plus, D plus, S plus on the passive, my aggressor can also be W plus, D plus, S plus. It is an opposite, and yet that is telling me that price should sell. That is what it is telling me, because it is an opposite of exhaustion absorption. It is an opposite. It is an opposite of exhaustion absorption. So instead of us to have all of them negating each other, in this case, we are having a pro trend of each other. But because of the information we have, which is the number one factor, that is how we will not fall to the trap and know. So we will know that, oh, no, what this is showing me is that price want to continue the initial trend. This is not actually showing me that price want to keep going up or something. Because a trend in the market is not by higher high, higher low, lower high, lower low. A trend is established by exhaustion absorption. The only thing that establishes a trend is exhaustion absorption. That is the only thing. If there is a complete exhaustion absorption for a cell, that cell will be maintained until an equal or greater force meets it at the end. That is, if the highest volume OR at the high is weekly, that diverge totally for a cell, then the highest volume OR at the low, before price can reverse against all that cell, must also be weekly at least, or a higher what, or a higher volume OR like monthly, before price can reverse. What am I saying? What I'm saying is in exhaustion absorption, what I'm saying is in exhaustion absorption, for our passive and our aggressor. For the passive, we know that, let's say I have W minus, D plus, S minus. And the aggressor, after getting complete auction, which we expect that everything that it must also give us must be W plus, D minus, S plus, but that is total opposite of each of these. Then we can now take our reversal trade at a valid AOI beyond. That is exhaustion absorption reversal. So this exhaustion absorption, what I'm trying to say, in as much as it is external, is that it is the one that shows us that what price is bearish. So it is the one that tells us. So for price to reverse again and buy and come and clear that area where the first sell started, we need at least weekly divergence volume, weekly down to daily, down to sessional, from both the passive and the aggressor for that to happen. If not, then it simply means that what price is diverging against is probably internal structure. That is internal divergence, as highlighted in the previous two classes. Extensively, I have discussed that. Every other thing you need is just live sessions and practicals. It's just live sessions and practicals. So majorly, let's now go back to momentum absorption. Internal divergence curves. Incomplete exhaustion shows us, or non-exhaustion at all, shows us that what? Price want to continue a certain trend. And therefore, the next thing we check for is the internal divergence what? Divergence curves. Once we have these two factors, then momentum absorption can be anticipated. Momentum absorption can be what? Can be anticipated. Momentum absorption, in that case, can be anticipated. All right. So in that case, momentum absorption can be what? Can be anticipated. So let's look at different case scenario in order for us to understand that better and to see that it is actually simple and there is really nothing really to be scared about. So let's look at that. Number one scenario, let's say we have something like this. I have my passive trend as bias, and then I have my sorry, I have my aggressors as sellers. So at this particular area, if I have, let's say, incomplete or even no exhaustion absorption at all. So for example, let me first deal with no exhaustion at all. So let's say, for example, I have W minus, D plus, S plus. And here I have W minus as well, D plus, as maybe D minus and S minus. All right. But here at this low here, this is for my sorry. Okay. Sorry. That will not be correct. S minus, I'm coming. I want to erase something. All right, so this is the line. This is the low that is being rated by this aggressor. So let's say this aggressor is W minus, D minus, S plus. And then this particular low here, this internal low here, the opening range OR value there is, let's say, D plus, S minus. Okay, so we have W minus, D plus, S minus. We now have W minus, D minus, S plus. Now, W minus and W minus show us that there is no major absorption of that low. That is, price, because this low is what leads us to this high for external divergence. So we know that this high is still protected. So this high is protected. So protected high is not by liquidity sweep and all. Yes, those things seem to work in SMC. But understanding exactly what you are doing is the better function of being a trader. Here, we know exactly, you will know exactly what you are doing. And I repeat and repeat, ask your seniors. We know the direction of the market almost every time, except you do mistake in your coordinate. We know the direction of the market. The only mistake you might be making as a beginner will probably be early entries. I have said that over and over again. Or you not actually mastering your coordinates very well. Once you master your coordinates, this whole thing becomes bread and butter. It is too simple. Very, very simple. Okay. So, of course, you saw me even in live session last week. You saw me yesterday live session. The whole thing, our whole live session yesterday, if not that I was even trying to talk too much, was around 18 minutes. The whole analysis does not take me 5 minutes to do. So that is it. Once you master it, it's actually a very simple concept, yet too effective to believe. Too effective to believe. So W minus D minus S plus, W minus has already shown us that the aggressors are still in control, that is, price will still keep going down. Price is not reversing, that is, the external liquidity is protected. That is the implication of that. The external liquidity is protected. But however, look at it here. You would notice that internally here, let's say we are within the same week, this second W minus maybe the week opens somewhere around here. The week open here. And this one is another week entirely, but both of them are negative OR, negative OR. All right. So let's say the week opens somewhere around there. The new week opens somewhere around there. Internally, this low, this aggressor low, this low here, this low that was rated, this internal passive low that was rated is D plus S minus. Now, the aggressor that rated it is also the one that rated this external. And that one is D minus S plus. Now, a buy will start. A buy will start. And what would the buy do? The buy will go all the way because the internal divergence that is calling is this high. This low creates this high. So your inducement high or whatever is this particular high. So a buy will happen, and this is the buy you are looking for. But you know quite all right that price is still selling. So after price now went ahead and raised this particular high, and you spot your valid AOI that breaks structure somewhere around there, what we are saying is, even though we are in the same week, and this high automatically is W minus, of course, that's why we did not necessarily write the coordinates of this, because we are within the same week. So we don't need to write the coordinates from weekly. Weekly is constant. We only need the coordinates of daily. Okay? It is different day, but same week. Now, full divergence has happened towards this high. We have D plus and S minus. Here we have D minus and S plus. Price will buy. Fine. And that buy will be taken. That is the same buy that Euro USD has started since last week. But meanwhile, we know that Euro USD will still sell. It is still bearish. Why? Because there is no full absorption yet. Okay. So majorly, because we have this, after buying here, price can now, in as much as this is the high that is calling price, after price meets that target, price can now do a momentum absorption. That is, W minus is what is here. The same thing that is coming here is still also W minus. In fact, what is around this high could be maybe price did not even meet the target this particular day. The buy just started this particular day. Based on that is when we have full absorption. The target might not even be met then. Let's say we have this high here to be D plus S minus as seen. The same day that is coming to reach that particular high, maybe the second day after the buy started, is the one that completes that target. That same day can also be D plus S minus, and yet price will sell. That is what we are talking about. That is a momentum absorption. Same opening range values, yet causing a continuation of what? Of trend. But there are two factors that make us to know that what is happening is momentum absorption. What is number one? Number one is the fact that what? Is the fact that based on the external divergence that we start having here, what we have here is telling us that price will continue downward because there is no highest volume OR divergence. So we know that we are still going down. That is number one factor. Number two, the target of the internal divergence, that is internal divergence called, what high is calling price towards itself? Which market maker is in loss and is calling price towards itself by virtue of divergence? That is increasing offer, decreasing bid, or increasing bid, decreasing offer. These are things I have explained to you theoretically in all the videos over and over and over again. So what is calling price is what matters here now. After such target is met, then price can what? Can continue in the direction that it wants to take. because its direction is still bearish. Remember, exhaustion absorption is what establishes a trend, is what establishes a direction. It is what tells us the direction that price is going to. That is exhaustion absorption. So if there is incomplete exhaustion absorption here, obviously there must have been a complete exhaustion absorption here that started the sell. Obviously, that one must have happened. So if there is now incomplete, no exhaustion absorption here, either it is not even happening at all, or it is not complete, showing us that price still wants to go downward. And the price now pull back. That is telling you that price can do a momentum absorption at the high. After price met which target? The target of the internal liquidity that is calling price based on the internal divergence that is happening. Two factors. Number one, check. Are we still going in the direction of the aggressors? That is in the direction of the present trend. That is the number one thing to check. Number two, if we are still going there, fine. We know that price is always about impulse and correction. Where is price correcting towards? That is, which market maker has opened liquidity down? Which liquidity is engineered by a market maker for price to quickly pull back to raid before continuation? That is our internal divergence. So after the target of the internal divergence has been met, then it does not matter again the type of absorption that happened there. At times, exhaustion absorption can still be the one that will happen at that high for continuation downward. It is very possible. At times, it can be what? Momentum absorption. All right? That will happen there. It can be momentum absorption that will happen there at that particular high for price to keep pushing downward. So this is the what? This is momentum absorption. I repeat, two factors. Check for exhaustion absorption. If it is incomplete or if it is not even happening yet already, showing you that price is still going in the normal direction, then you now check for the internal exhaustion absorption. That is to know already based on the major, that is the external exhaustion absorption is what you check for first. Based on that one, you have already established and you know that price is still continuing in the direction that is being noted. All right. So now the next thing is to check for the internal liquidity that is calling price. After you know the internal liquidity that is calling price, oh, well then, after that target is met, all you need to pick is your HOI, irrespective of the type of absorption that is happening. If it is exhaustion absorption that is happening at that particular high, oh, no problem. You can what? You can, if it's the exhaustion or absorption that is happening at that particular high, no problem. You can wait for the complete what? For the complete exhaustion absorption to happen. But if it is momentum absorption, no problem. You just take your trade around your AOI. In fact, at times price might just rate that particular high or low a little, and the price will continue going in the direction identified. All right, so that's basically how it works. So now let's read out everything we have said. As discussed earlier, momentum absorption happens during the continuation of a trend. For a continuation to occur, exhaustion absorption or momentum absorption can be displayed. If market is trending downwards, and let's say the highest volume OR is weekly, if each week's high around the trend is formed through a sell OR week that is negative, and subsequent weeks are also giving negative OR or flipping to it, then price will keep using the previous week's range as a roadblock. That is, previous week's high will not be rated. This is called seller's hardening. But if in a bearish market, the highest volume OR, say weekly OR from a previous week is a high formed by a bi-week opening range, and the present week opening range is also a buy opening range, then the new week will rate the previous week's high or any significant high within the previous week range that price has internally diverged against and yet continue selling after. This is called buyer's pulling, and such is much case as seen in the momentum absorption, chasing market towards the initial trend. This is a removal of bias imbalances, momentum absorption, done as an absorption of counter trend ticks quickly before continuation. This is often initiated through an internal structure which price has initially diverged against its high or low. Internally, after such breaks a key level. Note, this exact logic is applicable in a bullish trend. However, anticipating a momentum absorption is very easy. Also, exhaustion absorption is what establishes or starts a trend. Therefore, if there is a high volume over exhaustion absorption that starts, say, a bullish trend, an equal or higher volume over exhaustion absorption is what can reverse such trend. With this, one is sure of the trend in control and can easily look out for which direction a momentum absorption is reinforcing. I have explained all of this. What this is still telling you is that is already here. Let me draw another thing. So that is, let me use a buying scenario now. So that is already here. I already have something like this. You have a full exhaustion absorption here at this low for a buy. And then the buy started. Okay, so and then the buy started and start. And price has now, of course, maybe rated a certain high like this. Okay, full exhaustion absorption is what establishes a trend. That is, it's what tells us that price should be buying. That is the implication of a full exhaustion absorption. So the only thing that can now, if this full exhaustion absorption, if the highest volume or relationship between them is, let's say, monthly, that is at this low, we have M minus, and the aggressor is M plus, along with the other lower opening range coordinate. All of them diverge. That is what we mean by full absorption. But at this high here now, if let's say what we now have is even weekly, if you have something that seems like even weekly full absorption, exhaustion absorption here, W minus W plus, this cannot come and raid this low. It cannot. Why? Because of this. Back to the basics. Price moved in the direction of least liquidity relative to demand. A volume OR is obviously higher than a weekly volume OR. A monthly volume OR is obviously higher than a weekly volume OR. Okay, so and a weekly is higher than daily. So price will move in the direction of least liquidity relative to demand. So which means this weekly volume that you see is of course a lower volume compared to the monthly full absorption that happened here. So this likely is just targeting an internal. So you just need to still target an internal. Okay. Or let's even say what we have at the high, that is the absorption happening at the high is not even happening. That is, when price even rate this is even W minus, showing that price is still going to the uptrend because this is what establishes the trend at this low here, which is your white curve accumulation and distribution. When you have your full absorption, that is when you say that that is why most people, in fact, everybody that trades white curve is trading it as a pattern, except you actually understand absorption, except you know the true participant. That is when you can truly tell me before it completes. That is when you can tell me exactly when it completes as it is getting completed. Not after it has completed and you have seen something that looks like spring and you have seen price breaking structure. No, I'm saying catching the low. Can you actually do that? So that can majorly be done. All right. So that can majorly be done by virtue of a minute. So that can majorly be done by virtue of absorption, understanding absorption. That is when you can actually know When is price trying to reverse? When is price not trying to reverse? Okay. For example, this present buy on Euro USD from last week, many people will be caught up in the buy. If tomorrow complete our absorption for us and we sell, many people will start looking for more buy re-entry, and they will be caught up in the trap. Why? Because when people just see break of structure, they just want to follow the trend. They think, okay, price now reversing to a certain premium. But the question is, where is premium? Premium is relative. What's the core premium on a certain time frame? Is relatively a discount on another time frame. Okay, so understanding what you are doing better is the whole idea of HORC, nothing more. Knowing the true participants of the market. So majorly, the question is, what is price? Let's say this is W plus, and this is what the aggressor's W minus. So W minus. So this is what they are aggressing about. So this W minus started the divergence for price to start coming for this particular low. What will complete it, another week might actually even open. And the new week that open might open as a buy OR, that is as W plus, that does not matter. And yet it will come all the way to come and raid this low, and we will have W plus, and then price will what? Price will yet continue upward. So what happened here is what we call momentum absorption. Please don't think because I'm writing just one, you still need to consider every other lower HORC. So the major thing we are trying to say is that a momentum absorption is governed by two factors. Factor number one, if towards the trend you are anticipating it, if there is incomplete what? Exhaustion absorption, that is, price still show that price want to go higher or price want to go lower. Then also, when do we anticipate, after we have noted that, then when do we now anticipate the momentum absorption to likely happen? After the internal absorption target. That is, there will be a certain exhaustion absorption internally that you should search for. After that particular internal absorption target has been met, then momentum absorption can then be anticipated. All right. And also, I said it's do have a cheat code. The cheat code is that, remember that brokers, normal brokers and futures do show different prices. The cheat code is that your futures might show momentum absorption because that is most likely what will happen when we have cases like that. But your brokers will help you by showing you exhaustion absorption. So when you see something like that, that is brokers are telling you exhaustion absorption, but futures is telling you momentum absorption. Trust me, both of them are correct. And they are actually relatively saying the same thing. The way they just present that continuation to you is just what is different. So the major thing you want to note is this. Do we have continuation from the start when price rate this high? Is price reversing totally? Or it is just a continuation it is just a pullback towards an internal structure. The moment you see that here there is no full absorption, no full that full will be in bracket because it can be no absorption at all or no full absorption. So the moment you notice no full in bracket, that is, it is optional. No absorption as between this particular range, then you know that all you need to check is for internal absorption. That is, when this pullback is happening, it is just pulling back towards the internal liquidity. That is where there is internal absorption. Towards there is what price is pulling back to. So when that pullback target is met, so you can anticipate either a momentum absorption or an exhaustion absorption for price to continue upward. So that is everything about absorption. That is everything about absorption. In the live classes, you will understand better. For example, tomorrow, we should also have this thing tomorrow, live training session tomorrow. Tomorrow we'll likely have live trading session in the morning. All right. So yeah, so be there. So it is during live trading session you will get to understand how we differentiate the futures chart from the normal currency chart, how they tell different story and how we maximize both story to our advantage. One major way is the one I just told you now. Okay, you know that futures chart has different opening time compared to the currency. Currency charts, normal CFD, that is contrast for difference. The question is, why is it called contrast for difference? It is contrast for difference in the opening time. That is what makes its opening range very interesting. That is what makes it different. It is a contrast for difference for the opening time. Brokers will open 1 hour before normal futures, which is the true chart, before it opens. So not like, oh, do I see exhaustion absorption on futures and I'll like neglect the one on broker, or I see exhaustion absorption on broker and I'll neglect for futures? No, that is not how it works. How it works, we will use them hand in hand. The worst case scenario that do happen within them is what you call divergence, SMT. That same SMT, the way people trade it is just in form of indicator. It is more like indicator because it is after it has formed that some people will see it as SMT. But in the real sense, what do form for price to form higher high on a certain currency, and or maybe even, in fact, it can be between Euro USD and GBP USD. So maybe Euro USD is showing higher high, GBP USD is showing lower high, lower low, higher low, then lower low for a reversal. Trust me, go and check. Anytime you see cases like that between Euro USD and GBP USD, go and check for the participants at each of these low. Go and check for the 1 year. You will see that one participant is different from the other. So either this one has same participants showing momentum absorption continuation, and this one has different participants, that is maybe buyers and sellers, while this one has sellers and sellers or something. Go and check. That is what do happen, that do cause that SMT and all. Participant, the true participant. So that is everything about momentum absorption. Let's look at the example. So in this example, we are still within the same day here. This is the day open, and we are still within the same day. And of course, the day did not flip. The day opened as a sell, as you can see, and it is still a sell. So it is still D minus, D minus. So nothing changed, and there was no even divergence between previous day or present day or something. So D minus showing that price still wants to continue downward. That is what that shows. But internally here, between this range, in this range, the high of London, ISOR, so that is, it was a sessional divergence here. So there was internal divergence between Frankfurt and London. So I think Frankfurt was maybe a sell and London was a buy opening range. Yes, I think I still remember. Frankfurt was a sell opening range, forming this low. Then London opened somewhere around there as a buy opening range. And London, which are buyers, clear Frankfurt participants, which are sellers. So meaning that price is diverging against that same exact high. So what happened after? That same London was able to start the buy. It started the buy around 10 a.m. thereabout. And New York opened somewhere around there. New York also opened as a buy. So now London is a buy. Who are these higher buyers? But we have sellers and buyers diverging against that particular high because they are the ones. They diverge against that particular high, causing internal divergence, as exactly explained. So London started the buy. New York pushed the buy forward towards target. New York was also a buy. What happens? Even though London that formed this high was a buy, opening range, New York was also a buy opening range. What happened? Yet price still go downward. So what happened there is what we call momentum absorption. Okay, same OR. But because we have D minus and D minus showing us that we are still going downward, that price is still going downward, that is, sell is the bias. That is the bias. That is the trend. All right. But this pullback, we know that it is a pullback based on this internal divergence between two sessions that is calling price towards itself. And immediately that particular high is rated, price continue its direction. That high was just rated a little. A little. Price, it just got rated a little. I don't know if you guys can see it. That high got rated just a little. I think you guys should be able to see it. All right, this high is got rated just a little. If you look at that straight line very well, and then price continued. So even though buyers are resting here, and New York that completed the targets of the buy that started from London are also buyers, yet price continued downward. So that is what? That is momentum absorption. Let's look at another case scenario. Look at this very well. I use this particular area under exhaustion absorption as example as well. Look at this very well. From the previous week, all these aggressors that reach here are still W plus. From the previous week, intraday wise, an external divergence happened internally here. Look at it. Oh. Here, this particular low, there was an external, there was full absorption of this low that started. All right. On Friday of the previous week, full absorption started here, but has not tapped the refined AOI. Also, the external liquidity is the target. Of course, because this low here, what high does that low formed? It is this high now. So if price is absorbing this low, it is leading us towards this high. So from that previous week, external absorption started. All right. So price started absorbing this particular guy here from that previous week. So when the new week opens, the new week opens as a buy opening range also, W plus. So it was able to complete it into the refined area of interest, met the target of the absorption that started here initially from the previous week. And even though this W plus and W plus, price still continued downward. Why is that? Because here there is nothing, there was no full absorption at the left side, which wasn't shown, that show us that price wants to continue higher. No, price is still selling. The absorption we had was at the top, showing that price is selling. So even though we have same OR, the OR was just to complete the narrative, an incomplete narrative from the previous week, after which price continued the initial direction. So the highest volume area is W plus. Here also is W plus. And yet, price continued downward. In fact, it was W plus D plus, I think. Because I think this flipped, it cleared the low, cleared the high, made the target for the day, for that Friday, made the target and flipped to a buy somewhere around there. So it was W plus D plus. Also, this is a Monday. Remember, Monday assumes the open range of the week. So Monday also was W plus D plus. Full momentum absorption for price to continue in the normal direction. So momentum absorption is simply, and even for this one too, I think there was no cheat code. That is, the currency pair also show the same story. Okay, the currency pair also show the same story. That's why I told you that it is just something to note and master. Your question is, that particular sell or that particular buy is it to be continued, normally based on external divergence? That is, if there is no full absorption yet on the external divergence, then you know that it is to be continued. So you can anticipate and know that even though you have the same volume OR, price will continue in the direction of the market. What is the direction of the market? As established by a full exhaustion absorption. So that is it. Okay. So that is it. This is that same. You see the same place, is exactly what I now put a bigger picture here so that you guys can understand comprehensively. Here, this is where we have full absorption, showing us that we want to sell. Full exhaustion absorption for a reversal. That is where we have it. All right. So this aggressor that reached this particular last low are the same. It is the same W plus, and it is the same W, sorry. No, I can't remember now. I think this is, no. This differentiates based on futures. And I think for futures, this one was W plus thereabouts. I can't really remember. But the last high that was rated there on lower time frame, yes. So on lower time frame, the last high that was rated, the last low that was rated there internally on lower time frame, you can check on 4-hour time frame. It is a recent PA. I can show you guys tomorrow. The last low that was rated here internally here was what? Was I think the same OR as what is rating it for that particular thing for a continuation downward. So meaning that whatever happened here is just a continuation trend for a reversal to actually what? To actually happen, since there is no full exhaustion absorption to what is it called? To opposite this. Or maybe here this one also wasn't full or something. I've forgotten now actually. But I know that there was no full momentum absorption here. Though I remember that on currency pair also this is W minus and this was W plus. But the exhaustion wasn't full yet. It wasn't full at all. So something was still missing between the aggressor and this, maybe daily thereabout, showing that we still want to continue downward. So for the narrative that now happened here, that shows us we are going downward. So that is the momentum, absorption. I repeat, price will move in the direction of least liquidity relative to demand. Least liquidity relative to demand. Okay, I show you that same example I show you of sessional is the same one I repeat here. I was just trying to show you here, we even have full exhaustion absorption between Tokyo and Sydney. All right. So there was nothing to oppose that, showing that that is the trend, even though this is also D minus and D minus, but this also has established that trend for HORC. And whatever happened here is just buyers and buyers causing a momentum absorption to go down. Conclusion. Mastering how to write correct opening range for monthly, weekly, daily, sessional, or news is what I didn't talk about news, all true. There is a reason for that. All those will be noted during our practical because it is actually simple. It's just the same way. For news, you just need to know the charge. News can maybe replace sessional. For example, let's say at this particular low here, this low was formed from a certain news. And that news maybe cleared the low first, showing that it is sellers. So that news is what will assume the sessional OR at that low. That is, it will be the S minus at that low. Meaning that whatever is now coming to raid it, we need S plus. So that is the only thing you need news for. That's the only thing you need news OR for. Just to know the charge. Does the news clear the low first or clear the high first, which is not so much important. In fact, if you want to swing trade, sessional OR might not be so important at times. Trust me. If you want to swing trade, because automatically you do confluence, you know that is more like the smallest unit of time. So automatically you do confluence and but it is good to always check it to avoid some little loss that will now later go into your profit. So that's it. So let's go to HPO3. HPO3 is very simple and direct. HPO3 is simply the counting of multiple of 3 candles from the point of absorption. That is HPO3. And you will get to understand that better as we note. That is, for example, if I have absorption taking place here, before this particular I gets rated, maybe absorption towards this I, of course, this low create this I, and another W minus W plus. So HPO3 for the buy that will start, HPO3 will confluence. It can be 6 4-hour candles. It can be 9 4-hour candles. So you will now be like, how do we know if it is 6 4-hour candle that will be formed, or just 3 4-hour candle, or even it can be 3 days. 3 days is also what? 3 is a multiple of what? 3 days is a multiple of what? It's a multiple of 3. 3, 6, 9, 12, 15, 18, and the likes. So the question you want to ask yourself is, how do we know which of the number of candles that will finish it? That is why for HPO3, you still need what? You still need HORC. So you will know that based on when you have your full absorption. For example, when price reached that, let's say we have W minus, W plus, and daily has not diverged. Let's say we have D minus, and we also have D minus here, showing that full absorption has not happened yet. So maybe the third 4-hour candle after price rate this low is still within this same day that first rate price. All right. And that day that first rate price is D minus, showing there is no full absorption. So if that is third 4-hour candle, you automatically know that that is not what can start your HPO3. You will know that that is not what can start your HPO3. But the major thing is that you count it from the candle that rates, that starts the absorption. That is the first candle that rate this low, signifying that the highest volume over weekly and weekly has started diverging. That is your candle number 1. So now you now wait till the second day. Let's say the second day is now what gives you your D plus. Okay, the second day is now what gives you your what? Your D plus, which is what you are searching for. You know, D minus, D minus. That's why that day cannot start just like today now. Today now, because there is daily has not diverged or something, according to you guys, though I have not checked. Today, even though weekly minus on normal currency pair and weekly plus full absorption has started for our sell, but today does not diverge. That means that our sell we anticipate cannot start today. That is the implication. It cannot start today. That sell that we anticipate, it cannot start today. So we wait till tomorrow. But does that mean that we will not take any trade? No, of course. You saw some of you guys that are your senior, like I think Bailey and all. You see that they took the buy because they know what they are doing. That's what we are saying. That is momentum absorption for you. That does not mean you will not take a trade. What I show you is that the reversal for the sell has not started because there is no full absorption yet for the sell. Meaning, what does that automatically mean? If there is no readiness for sell, automatically it means that you should buy now. If you are not buying, then you should be selling. There are only two things to do in the market, isn't it? You either buy or you either sell. So if there is no full absorption, showing you that a certain present trend, maybe your buy, is still in motion, automatically you keep taking that buy. I hope that makes sense. You keep taking that buy. All right? Because there is no counter what? There is no counter trend for it just yet. All right? So that's it. So that does not mean you shouldn't take the buy. So you should be able to take every trade that you want to take. No full absorption, fine. Take the continuation trade. When there is full absorption, take your reversal. It is that simple. So HPO3 is in line. You only need to check HPO3 after you notice your full absorption taking what? Taking place. But the counting starts from where a certain absorption started, or from when a certain absorption started. So the moment price started absorbing, that is when HPO3 confluence starts. So let's see, for example, this same London and Frankfurt divergence that I spoke about, from exactly that particular candle on 1 hour that raised that low, because the rate of that low, you know, on Frankfurt's low, we say that sellers are there. For the aggressor, which is London move, buyers are the one that diverge. The first candle that raised that particular Frankfurt's low in London, being your candle 1 on 1 hour time frame, that is candle 1, candle 2, exactly candle 3, the third candle is what started that buy. Exactly the third candle. Let's look at another example. This same example I have been using for you guys over and over again. This one here. All right, for this weekly, I use it in momentum absorption. I use it here. I use it everywhere. Let's see. After absorption started at the low, for the buy that happened next, let's see what happened. When at this low here, we have W plus. This new week opened as a buy, like I told you guys, to raid this and continue selling. But the flip point to sellers is at this low for that week. So the aggressor that came to raid this passive low was W minus. So showing that absorption has started. But the day was missing. The day at this low was D minus. You know, it was at this high that I said the day flipped to a buy. The day at this low was D minus. Also, the aggressor, remember it was the same Monday. Monday started as a buy, same with the weekly, and they both flipped to a sell at this low. So Monday was also D minus. So D minus and D minus, price cannot start that day. So price extended into Tuesday. So that day, look at it, candle 1. Another thing you must notice that your third or multiple of 3 candle must be the one to form the lowest low. or the highest high for you to confluence it as HPO3. That is, your candle theory, for example, the candle theory here even is an inside bar. It's formed inside. It didn't even read below this low. That is another thing to let you know that it is not candle theory confluence. Although even we know that this day cannot also start the buy, which is actually what should be your major focus for it. So from when the absorption started, W plus and W minus, showing absorption has started. So we have candle 1, candle 2, candle 3, candle 4, candle 5. We are now in the second day, which was a Tuesday, and the one that has given us D plus. Exactly the 6th candle. Candle 6 started the buy. This buy, I took it on, I posted it on Twitter that time because this move was from FOMC that I used to, crack a boring joke that thank you sellers. If you remember that particular post, the first time I posted something like thank you sellers for the buy, thank you buyers for the sell, it was actually this post that I used. So in FOMC, many people were trying to sell here because they see a fresh order block. That is the thing. It works in SMC. Yes, you will be right. If you are trading a good SMC, you'll be right. Most I've traded SMC before. It has made me a lot of money before. But here, you know the exact thing. Even though this order block looks so fine, even though this AOI is unmitigated, the question is, you know that it will be violated, especially if there is a news. Remember that volatility leads to imbalances. And what is imbalances? Imbalances is simply the violation of an area of interest, the violation of your limit orders, the violation of your passive orders, the violation of your order blocks. That is imbalances. And what do lead to imbalances? When there is high volatility in the market. When do we always have high volatility in the market? When there is low liquidity. When do we have low liquidity in the market? During news. That is when some investors withdraw. Lesser liquidity, higher volatility. Higher volatility, lesser liquidity. Does that make sense? So that is it. So I took this back confidently and I put my TP here. You can search through my highlight or my post. It is not to maybe like 3 weeks ago post or maybe 4 weeks ago. I can't remember now. And I TP at this exact high, even though there is other block here and HORC where many people were selling before the news. Because they now see this as liquidity, they now see this high also as what? Inducement. No, you don't use your eyes to pick inducement. That is the whole beauty of HORC. Telling you the exact available liquidity. That is HORC. So W plus W minus showing you a divergence against this I. That is it. And confluencing to HPO3 for the buy. And then you start the buy. All right. And then it leads you to your target. Same thing here. Even this same sell that have started since March. All right. You know, the same sell started since March. Same thing. We have absorption. And daily didn't confluence. We needed, I think it was, we needed D minus. And every other day that was confluencing was D plus, D plus, and D plus, and D plus. So until this last day that we had the D minus. So, and it was day 1, day 2, exactly the 3rd day, started the sell that began now. You can check your daily time frame. This is daily time frame. All right. That started the sell in March. It is not coincidence. Price move in 3 ways. And you have already seen that proof from HORC. Clear the high, clear the low, met the target. Clear the low, clear the high, met the target. So the most objective way also to count 3 pushes. You see that in SMC world, if you have traded a lot of SMC, you see that there was a time that this pattern, 3 push pattern, was very common. It seems like it's working because it makes a lot of sense. Price actually moves in 3 steps. Every single time, price is moving in 3 steps. Every single time. 3 steps is what, even in Elliott wave. Elliott wave, we have 3 impulses for the major impulses. Wave 1, wave 3, and wave 5. So many researchers have spoken about the power of 3 when it comes to trading. Many researchers have spoken about it. But for me, the only way I use power of three is by counting of candles, because I know that 3 candles will always be 3 candles. 6 candles will always be 6 candles. So that is like the most objective way I can think of using 3 pushes confluence. So HPO3 is just what? Is just a final confluence. So, and yeah, all of these will be spoken more about in our practical class. I think it is high time we stopped the boot camp. Thank you for those that joined from beginning to end. I did not miss anything. How was the boot camp? Hope you learned a lot. Hope you now have hope of improving as a great trader. You now saw the possibility of the accuracies we talk about. There is nothing like some set of use for HPO3. Your HPO3 is just a final complex. It can be 15 minutes, it can be 5 minutes, it can be 3 minutes time frame. The question you want to ask yourself is there full absorption yet? After there is full absorption, for you to now enter trade, you will now check from where the absorption starts, which of this time frame confluence to it. But of course, most common time frame, it depends on how far your full absorption. Imagine, for example, here, before the full absorption happened, it is very far from where absorption started. So it also depends on that. That will depend on the number of candle or the time frame you can relatively check. If, let's say, immediately price reached this low, it's also immediately that absorption gets completed. Obviously, even 15 minutes, 5 minutes chart can just complete candle 1, candle 2, candle 3, and price will start the buy. So it depends on how far price is to your AOI or what's not. I could even remember this one too. Here, when price met the internal divergence that price is seeking, okay. So when price met the internal divergence here, that price is seeking around this area, because price actually sold here, and this is the valid AOI next to it. What happens? Price use, I think, 6 4-hour candle to push into that AOI. Let us check it on normal chart. So you guys, I said, how was the boot camp? How was everything? Hope you guys learned a lot. Hope you now have confidence of improving as a trader. Hope you now understand that there is more to trading than just marking liquidity with your naked eye. Now you understand liquidity very well. Now you have deeper understanding of the market. Now you know that this is no gimmicks, but this makes a lot of sense on every level that you put it. On every level that you put it. So how was it? Yeah, this is that particular one I'm talking about. Yeah, this is that particular one I'm talking about. So after price here, so here at this high here. So after price met the because this was the internal target that was calling price. After price met that target, and the valid AOI above it is obviously this. This is the AOI that breaks this key level. So after price made that, look at it. How many 4-hour candles? So it depends on how far price is to even your valid AOI. Candle 1, candle 2, candle 3, candle 4, candle 5, exactly candle 6. It is not random. I will show you that over and over and over and over and over again. It is not random. It is not. Most of my trade, if you see me post any trade tomorrow, go and inspect it as my student and go and see if it is gimmicks. Here too, there was full absorption here because monthly flipped from sellers, April flipped from sellers to buyers at exactly this point. So when price came to rate this low during NFP, price did a full absorption here. From the point of full absorption to what fully complete the full absorption that also started when price met this target. Because here, this internal structure was calling price here, this one. It was actually calling price here. Here was, I think, this low was W minus, and what came to read it was W plus, but daily was missing. In fact, from when daily was missing, it was the 3rd day that the buy started. I will show you HPO3. HPO3 will always happen. That is one thing I also want you to note. Look at it. W plus, this is the go and check all these things. This low was from W plus. The aggressor was from W. Sorry, this low was from W minus. The aggressor that came to ready this particular day is what came to ready W plus. From that particular point, was it this one? 1, 2, 3. No, I don't think it was this one. There was one that was daily. I think this one was 4-hour time frame. There was one that was daily, that it was exactly the third day. So when price see your OR, so for this one, from this full absorption here, that happened here for this particular buy, in order to complete the full absorption here, exactly when that full absorption happened here, because the absorption started here at exactly this high, which was the flip point, we have day 1, day 2, exactly day 3, what was started the sell here, exactly day 3. All right. Okay, it was on futures, Abby. It was on 6E. A question, please. Aside Monday, the market opens 10 p.m. Sunday. All other days opens 12. For where? All other day also opens 10 p.m. Every day opens 10 p.m. Every single day on currency opens 10 p.m. And every single day on futures opens 11 p.m. And when November comes and there is daylight saving again, every day will start opening by 11 p.m. And every day on futures will start open by 12 p.m. No, price always open a day before. A day before, the day before the normal day. So that is Friday opens 10 p.m. on Thursday. Yes, now. That is when price open. It is on your chart. Check all the timing of this separator of this thing. You will see 10 p.m. Can you see 22 at the bottom? Every day opens 10 p.m. the previous day. That is Friday opens 10 p.m. of Thursday. So that is it. So every day open. That is a day close is automatically another day open. So it is not apart from Sunday. In fact, the reason why price open on Sunday is because price has to open 10 p.m. a day before. That is even reason why price open on Sunday. On a normal day, how is your chart not like that? There is no chart that is not 10 p.m. and 11 p.m. Go and show me. There is no chart, except if you are the one not saying right. Like currency pair, it opens 10 p.m., sir. 10 p.m., that is when it opens. All right. So, and when it is November, maybe he's using GMT. Don't mind him. Maybe he's using GMT or using GMT plus 2. Change this. See this place, UTC. Change it to UTC plus 1 Lagos. UTC plus 1 Lagos. Can you see? And then it should be on UTC plus 1 now. And go and check. It is 10 p.m. now. That is when price closes and open. You are the one making a mistake. There is no, that one is not an issue. So you are the one making the mistake, not, maybe you are the one assuming in your head that it is 12 p.m. that price open. Price does not open 12 p.m. So any question? Sir, my trading view shows no data for Euro USD. Maybe you are using fake trading view. Me, I don't know about that one. If you're having any issue, then it must be from you. Maybe you are using fake trading view. Or maybe you offend trading view. Because I don't know how that could be. When other people own is showing. Maybe they don't like you. You can change your identity. Maybe they don't like you.